Hi, this is AJ Macdonald with Devin Jones, and we're going to talk to you today about the tax ramifications of inheriting an IRA. So a lot of people don't spend their IRAs, and so when they pass away, there's still money left, and it goes to either generally a spouse or somebody else. So what happens? What do you got to do?
Great question. I mean, this is one that we get all the time, right? Unfortunately, we have our fair share of clients that pass on, and so it is a topic that we deal with quite frequently. It really depends. I mean, it depends on if it's a spouse. I mean, a spouse, then there really doesn't have to be any tax ramifications necessarily, or at least not immediately. Situation's way different if you've got a non-spouse that inherits an IRA. Then it gets a little bit more complicated. We're not going to get into all the ramifications in this video, obviously, but things have changed over the last 5 years as far as how things are paid out and how quickly taxes need to be paid on those distributions. So
right, exactly. A big change was the Secure 2.0 Act that has been passed recently. So we won't talk about what happened before, although we have a lot of clients that inherited years ago. So those rules are a little bit different. But under the Secure 2.0, generally, if you're a non-spouse, as Devin had mentioned, you're going to have to liquidate that account either within 5 years or 10 years. Generally, it's 10 years. And so you can do it faster than that, and that's where the tax ramification comes in. And so doing some planning to determine when it might be advantageous to accelerate that distribution or to stretch it out. There are RMDs, that stands for required minimum distributions, that are required. It was kind of up in the air for a couple of years.
it was, yeah, it was not black and white by any stretch.
And so there are some required withdrawals that need to be made, but you can always accelerate that.
Yeah, you don't have to do it all at once. You don't have to do your distribution. You inherit the IRA, you don't have to do it immediately, although you can, like you said, you can definitely expedite those distributions. Again, it comes into the tax planning side of it. We're not CPAs, we don't do that, but we do certainly work with CPAs, and we definitely will discuss that and discuss the windows of when maybe it makes sense to do those distributions and accelerate them, like you said.
Exactly, and to Devin's point, we're not CPAs. We do use some software, some tax software called Holistiplan. You might be interested in watching one of our other videos where we talk a little more detail about that. But we can put in different scenarios and say, well, here's what would happen if you did it a distribution in this year or that year, et cetera, and the tax ramifications. So we're not actually doing the ramifications of that, the software is. So pretty interesting. And then, of course, as you mentioned before, spouses have a little different rules. Also depends on if they're already in RMDs or not. But if they're not, then spouse could go ahead and just assume that IRA.
Right, they're not in the accelerated window or the 5 or the 10-year necessary payout or whatnot.
Exactly. So anything else to add?
Nope, I think we covered a lot of it there. Like I said, it gets very specific. I mean, it's a much more in-depth conversation that we would have with each individual, but kind of on a 30,000-foot level, that's kind of what we have for you today.
Yeah. If you guys have particular questions, please give the office a call. We'll be happy to talk to you, schedule a free appointment. Thanks for watching.